This is what happens if you invest $10,000 in these top 3 dividend ETFs. Have you ever worried about outliving your retirement savings? Or maybe you've looked at the stock market and felt completely overwhelmed, unsure of where to even begin. You see all these headlines about complex strategies and overnight millionaires, but what if the true path to building lasting wealth creation was actually simple? What if you could build a portfolio that pays you consistently, a portfolio that works for you every single day, so you don't have to? Well, that's exactly what we're going to explore today. We're going to walk through what happens when you invest a single, initial investment of $10,000 into 3 of the very best dividend ETFs on the market. This isn't about chasing fads. This is about a time-tested, proven investing strategy that serious investors have used for decades to build substantial passive income and secure their financial future. Get ready to see your money in a completely new way. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. The power of an initial investment. Imagine this for a moment. You have $10,000. It could be from a bonus, an inheritance, or just years of disciplined saving. This isn't a small amount, but it's not an astronomical sum either. It's a powerful seed, and with the right approach, it can grow into a magnificent tree. Now, instead of letting it sit in a low-interest savings account, you decide to put it to work. You're going to use this seed money to buy a slice of some of the most stable and prosperous companies in the world through these 3 dividend ETFs. You are now a part owner of hundreds of businesses, from tech giants to consumer staples, all paying you a portion of their profits. That $10,000 isn't just money anymore. It's a team of workers, and their job is to make more money for you. This is the first, most critical step in your journey toward financial independence. The 3 pillars of a strong portfolio. Let's break down the 3 ETFs we'll be focusing on. We're not just picking random funds here. Each one serves a specific purpose, a specific pillar in your portfolio, giving you a well-rounded and robust investment strategy. ETF number 1, the High Yield Income Generator. This first ETF is for the investor who wants to see their money start working for them immediately, generating a substantial passive income stream from day one. This fund focuses on high-yielding stocks and uses a covered call strategy to boost its payouts. The companies inside this ETF are often familiar names in technology and other high-growth sectors. But instead of just waiting for the stock to appreciate, this ETF is designed to pull cash flow out of the market and deliver it to you. Think of it as a rental property, but instead of dealing with tenants and repairs, you're just collecting a very healthy rent check every single month. Your initial $10,000 goes into this fund, and within a few weeks, you start receiving monthly payments. This is the perfect choice for someone who wants to see their financial planning bear fruit in the form of regular, predictable cash flow. ETF number 2, the Dividend Growth Powerhouse. Next, we have an ETF that represents the core of a classic retirement portfolio. This fund isn't about the highest yield right now, but rather, it's about a consistent and steadily growing income stream. This ETF is built on companies that have a long, verified track record of increasing their dividend payments year after year. We're talking about the titans of industry, from healthcare to consumer goods, companies that have proven their durability through recessions and market volatility. If the first ETF is your rental property, this one is like a high-quality, appreciating piece of land. The rent you collect starts out moderate, but it gets bigger every single year, and you know you can count on it. The real magic here is the combination of a growing dividend and the underlying capital appreciation of these blue-chip companies. It's the kind of long-term, low-stress investing that allows you to sleep soundly at night. ETF number 3, the All-American Growth Engine. Our final ETF is a true foundation, the bedrock of almost every serious wealth creation strategy. This fund tracks the S&P 500, giving you a piece of the 500 largest, most influential companies in the United States. While its current dividend yield is the lowest of the three, its strength lies in its potential for significant total return driven by capital appreciation. This is your pure growth play, your way of participating in the engine of the American economy. Your $10,000 here is a stake in the future, in innovation, in expansion, and in the sheer power of the collective market. The dividends here are a nice bonus, but the real prize is the long-term growth of the fund itself. It's the ultimate form of diversification and a non-negotiable part of a well-balanced portfolio. The true accelerator, drip and compound interest. So, you've invested your $10,000 across these 3 ETFs. Now, here's the secret to making this an explosive wealth creation machine. You turn on the drip or dividend reinvestment plan in your brokerage account. What this does is take every single dividend payment you receive, and instead of depositing it as cash, it automatically buys more shares of the same ETF. Think of it like this. Your little army of workers, your shares, is now getting paid, and they immediately use that money to hire new workers, more shares. These new workers then start generating their own income, which hires even more workers, and so on, and so on. This is the very definition of compound growth. This simple, automated process removes emotion from your investment strategy, forcing you to stay the course and let your money multiply on its own. It's the silent, unstoppable force that turns small sums into fortunes over time. A concrete example, the $10,000 journey. Let's get specific. Let's paint a picture of what this looks like in the real world. Imagine you put $3,333 into each of these 3 ETFs. From the high-yield ETF, you start receiving those monthly payments. You turn on DRIP, and every month, you automatically buy more shares. Over time, those payments grow because you own more shares. From the Dividend Growth ETF, your quarterly dividend payments are modest at first. But a few years down the line, those payments are noticeably larger, and you're buying more and more shares with each passing quarter. From the All-American Growth Engine, the dividends are smaller, but the underlying fund value is steadily climbing. Each quarter, your small dividend buys new shares at different prices, a process known as dollar cost averaging, helping you build a larger position in the market's most dominant companies. The beautiful part of this is that the money is never sitting idle. It is constantly at work, constantly multiplying, creating a virtuous cycle of financial growth. This is not a guess or a hopeful wish. This is a system that works. It is the core of smart, long-term financial planning. The emotional connection, hope, and security. For many of us, the idea of financial independence feels distant, like a dream that's only for a select few. But what we've just discussed is a tangible, actionable plan. This isn't about gambling. It's about a disciplined approach that puts you in control. That $10,000, when put to work with this strategy, isn't just a number. It's the beginning of a feeling of security. It's the knowledge that your money is working while you're living your life, giving you the freedom to pursue your passions, to spend more time with family, or to simply have peace of mind. It's hope materialized in a well-structured investment portfolio. This is the power of smart investing. The call to action. Now you have a blueprint. The next step is to act on it. This is your opportunity to take control of your financial future. If you found this information valuable and you're ready to start your journey towards financial independence, do me a favor. Click that like button. It helps us get this information to more people who need to hear it. Also, subscribe to the channel so you don't miss out on more content designed to empower your financial decisions. And finally, I want to hear from you. Leave a comment below and tell me which of these 3 ETF strategies resonates most with you. Your feedback helps us build a stronger community of informed investors. Thank you for watching, and here's to building your financial future, one smart investment at a time. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount.